Um, Good afternoon, ladies and gentlemen, and welcome to this week's webinar where we look at the trades this week and you have the opportunity to ask me a few questions. So as always, I encourage you to ask away with those questions and I'll do my best to answer them all. Any I don't get round to, I'll do my best to answer over the course of the weekend. So we did a live trading session this week, and again next week we'll do a live trading session. Unfortunately, there wasn't a great deal of variety in terms of events that were occurring during the week that we could we could give you as suggestions, and I'm not sure what's going on next week either, but I could always look now, but I won't do that. I will look afterwards, and we'll give you some ideas of what you might want to look at from a live trading session next week. Obviously, the week after we have non-farm payroll, we have ADP, and we have a few other things that are occurring. So there'll be a bit more choice for definite. But obviously, this week we did the opening bell in New York again, and it worked. It worked well. The market sold off. And I know that a number of you took 100 pips out of the trade that we did yesterday, I believe it was. What I'm finding quite awkward is talking about it and doing it whilst I'm watching it, and so probably haven't taken as much out of the trade as I should have at that particular point. But we'll look at maybe different ways of doing that over the coming weeks and putting TP levels in that hopefully will get triggered as well. But it did work well. I know that you're enjoying the live trading sessions, and the live trading sessions are always better from everybody's perspective when they work. So hopefully we have a few more of those over the coming weeks, and we'll give you some ideas in relation to those. So I have a few trades left open that I'll be looking to close out this week. Ran a couple of trades over last weekend. A euro trade that stayed with me for the majority of the week. Euro currently trading about 118.66. I think I closed out about 118.45. But it was against me throughout the course of the week. Had a DAX trade that I closed out on Monday as well. So, and as much as I don't want to keep repeating myself, I think there is some merit in repeating myself in that, as I've mentioned many times, I think the need to carry anything overnight should be completely ruled out. And even for me this week, as much as I tried to compartmentalize or put aside some of those trades that I was carrying over, it was very much a case that they were having some influence over the trades that I was taking in the early part of the week, and there was a bit of deference paid to the positions that I was holding, and that's not good. So, as much as possible, and from me, going into the weekend, this weekend, there will be no positions open. Take profit on whatever trades I have, or take losses if there is a loss there, and so over the course of the next couple of hours I will wind down completely the positions that I'm holding and start afresh on Monday morning. So it's been, and please, as I've mentioned already, please do send in questions as we're going through. So we have there the results so far. There's a few trades left open, and as I've said, they will close over the course of the week. I know you can't see the cursor that I'm using, but just going through, far too many stops, unfortunately, and sizable stops over the course of the week. A couple of gold trades there. On Monday, a DAX trade as well, and a Dow trade. So 4 fairly substantial stops on Monday, totaling, by the look of it, about 550 pips on a day where I did very little more than break even. Again, 2 substantial stops on the Dow on Tuesday. Had I held on to them, I think both of those trades would have gone into profit during the course of the day, but stopped myself out of them fairly close to what I think was the was the low for that particular day. And then again, for a trade carried over from yesterday, so reinforcing my comment from the beginning in relation to not carrying trades over. The gold trade that I did late last night or late yesterday afternoon was largely unnecessary, and carrying it overnight was probably even more unnecessary, and the trade has now been stopped out. So as it stands, with a few trades left to close and a bit of a loss to add on to this, somewhere around the 250 pips return on the week. The good news is it's the second week in a row that we've had a positive return, and some semblance of what I would like to describe, without being too cocky, as normality returning to the method of trading. You know, lots of stuff that can be improved. The stops, had they been you know, 2/3 of the level that you see on the screen, the return for the week would have been probably getting a lot closer to the 700-800 pip return for the week. So a lot of money, or a lot of pips, points, whatever you want to call them, being given away by running trades a little bit too long, and as I've mentioned already, there's probably 6 or 7 of those during the course of the week, and that's too many. So back to the markets and what's going on, and I don't see any questions coming through, and that may well be because we did the live session yesterday. So if there is no questions to come through, we may be finishing this a little bit earlier than I would normally have expected. One of the Dow trades there was just closed on a stop that I brought in a little bit closer than I'd had earlier. So the things affecting the market at the moment, obviously the Trump-Biden election, although not conceded in name, is largely conceded. The Mnuchin yesterday was withdrawing some of the pandemic support that's not being used, and there is a bit of friction between the government and the Fed in relation to that. We still have a lack of stimulus coming in to the normal people in the street, who are probably at most in need of the pandemic support at this particular time, and an economy that is continuing to falter somewhat, as we see the coronavirus still keep a strong hold over what is going on in the world at this particular moment. Lockdown is intensifying in a lot of different locations, as much as vaccine news continues to bring positives to the market, and we've seen last Monday and this Monday positive spins in relation to the likelihood that a vaccine is going to be forthcoming. And then a lot of cautionary notes about how logistically that vaccine is going to come to the fore. So there's a lot for the market to contend with. It is Thanksgiving next week, so it will be a holiday shortened week. Retail sales weren't as good as they were expected to be in the United States over the course of the last month that was reported. But obviously we have Black Friday on the horizon, Cyber Monday, and a number of other key retail days in relation to in relation to sales ahead of Christmas. Lots of different analysts reporting their forecasts for the end of the year. Many of them in excess of 30,000, although those may have tapered off since the beginning of the week. Obviously in the Dow we're trading 29,318 in the futures. We are approaching futures expiry, so the futures and the cash prices are getting closer and closer together. But a push to 30,000, I think at the moment we'll need some real positive vaccine news, stimulus news to come out of the US. But there will be some window dressing as we approach the year end. There will be people or investors looking to buy on dips, and obviously we've seen a pullback to this 29,250 level a number of times over the course of this week. I mean, we just bring up a slightly longer dated chart. So we've got a 30-minute chart there, and you can see the levels that we've traded to. Found a bit of support just below 29,200, probably looking for 29,150 as a low over the course of the last week. You can see here on your charts that low, and again here during the course of this week. I think it was yesterday that we went back down to that level, and it may well be that we'll see a move over the remainder of today. It is the weekend. There will be a certain amount of risk off movement in terms of the approach to the equity markets, and we could see another sell back down towards that level of around 29,150. I think that's probably the way that I will position myself as I move into the last part of the trading day today. So you could well see a sell order from me in the next few minutes around this level, or possibly even a little bit higher if we see a pop up into the close. In relation to the other markets, gold has recovered off of some of the lows that we've seen during the course of this week, trading back up around 1875 after being as low, I think, as 1855 during the course of the week. Still a market that, if we see some stability or continuing stability coming into the equity markets, and strength continuing in the equity markets, I think you will continue to see the rotation out of commodities like gold and back into the equity markets, where potentially the returns are more significant over the period between now and Christmas. The DAX is trading above 13,100. We've continued to find a lot of resistance as we've traded up towards 13,250, even or possibly just a little bit above that, and I think we will continue to see that. So it's really difficult. We are at record levels in relation to where the Dow is. There are a lot of positives that potentially can come to the fore over the next couple of weeks, be that stimulus, be that more positive news in relation to the vaccine. Pushing through 30,000 is going to be difficult, as we've seen over the last number of weeks. Certainly when you get there in the futures contract, we've rejected that level on every single occasion that we've been there over the last few weeks. And it will be difficult. There is going to need to be that extra bit of volume, that extra bit of momentum that's going to push this market through that level. I do think it will. Some of the rallies that we've seen going into December over the last couple of years have been very dramatic, and with that undoubted window dressing likely to occur towards the end of the year, I think there is every chance that we'll see this 30,000 level, and that comes from somebody who's looking to sell into rallies and isn't really a believer in the values of the market at these particular levels. But there is a certain amount of belief that we can get to that level, pushing through, staying through that level. For me, it is going to be a bridge too far, so I will still look to sell into the rallies as we move higher. I think there are opportunities on a pullback to buy into the market. So I don't see any questions coming through, so double checking that I pressed the button to start this afternoon session. Like I say, we covered some of this yesterday in the live trading session, so I'll probably call it a day there, and we can reconvene at the live trading session next week. Take care.